Hello, good morning in Europe, good evening in United States. Happy Friday, February, sorry, not Friday, happy February and Happy New Year to our Chinese friend. Today is the first day of Chinese New Year, and I wish the best year, the happiness in the coming year for all our Chinese friends, Chinese, Korean, all the countries that they're celebrating this moon-based years. Today's the first day of that. Let's go and start today. See what's happened. Yesterday was an amazing day. Last week we were talking about that the slowly the risk in the market going to be decreased because what we can see in the charts is that the markets cannot continue the way that we have at the in the for the US dollar chart for the US dollar and the risk because already we know what we need to know about the markets, about the expectations, about the Federal Reserve meeting, which it was increasing the risks. So all this, putting all this together, it means that the situation is much more clear. So when the clear situation, it means that the lower risk. Usually we have a risk in the market when the situation is not clear, when we don't know what is going on and what's waiting for us. Therefore, since it is clear for today, then we know what's going on. So we know what we're doing. So let's go and see the other charts. US dollar, yesterday we had, here's my chart. Yeah, here's my chart. Yesterday we had a speeches from, I don't know, George. Yesterday, Fed members, some Fed members, they had to speak. I think Dali, Bostic, and George. Yeah, Dali, Bostic, and George from the Fed, they had a speeches the talks, the conversation that they had, the tone of the conversation that they had means that we are not expecting so fast hawkish policies. If you remember, we were talking about a 96.40 as the first strong support here that we need to touch it because expecting for 50 basic point increase in interest in the March is a little bit out of the reality. It's not. It's totally unreal to go and say that we are ending the bone purchase plan, and right away we're gonna start increasing the rates. Same thing almost to the happen in Australia. The Australian Central Bank (RBA), just like they finished their meeting just an hour ago. They decided to end the bond purchases. Same what the Fed decided for the March. They already did it. But increasing the rates, Mr. Lula, the president of the Central Bank of the Australian Reserve Bank or Australian Central Bank or Reserve Bank of Australia, whatever we call it, Mr. Lula told that we are not expecting any rate hike until the year end. So till year end, Australia they're ending the bond purchases, but they are not increasing the rates. The same thing almost is expecting from tomorrow's BOE Bank of England. Let's talk about that tomorrow morning because it's going to be the tomorrow, like few hours after, like it will be the few hours after our morning updates. Anyway, so same thing happened. So for the Federal Reserve also that's the same. So when we see that the Fed is ending the bond purchase program at the March, in the March, it's like it's really unlikely to see that. Okay, right away we're gonna start it, and we're gonna start it with 50 basic points. Again, I do still have a doubt that if in the March we're gonna start the rate hike or we're gonna hold still wait still for one more month because I am not sure that it is going to happen. Anyway, this is the expectations at least the 25 basic points. So therefore, the market price on market range which was very high, waiting for more hawkish policies. Yesterday, with the speeches and with the data that we had, we got to the point. I wrote an article yesterday morning about the U.S. dollar and the market expectation. Hope you read it. You read it. So this I explained there why we need exactly to see the U.S. dollar in a lower levels, and it is what is happening. So it is in the lower levels, but it doesn't mean that the U.S. dollar going to be weak. It is still the US dollar still above 94 as long as it is trading above 94.50, 94.60, it is in a real clear upturn. However, For the short term, we're going to see some softness here. We have to wait for tomorrow's central bank's meeting in European Central Bank meeting and the Bank of England to see, then decide the future of the US dollar index. Therefore, for now, we are expecting to see a little bit that under pressure. Gold, with decreasing the with decreasing the market, with lowering the market risk, it was normal to see the gold in the lower levels, but changing the gold from uptrend to the downtrend is a little bit unexpected. You see that the gold price in this level, the gold the market volume is lowering, so the gold price is decreasing, but the market volume is lowering, is decreasing. So it means that we cannot see downtrend to go so much. And if we go and see, here we can see that, okay, the market may probably create a range of trading range somewhere around here, a new trading range around here about 1,790 and 1,815, or let's say the, yeah, 1,810, let's say 810 or 11. The market needs to be traded stable under 1,790 or above 1,811 or 10, about this, to say that, okay, now the trend is going to be changed. For now, generally, market still from the fundamental point of view, market still in the uptrend and market still waiting for higher gold prices. But from the technical point of view, in H1 and H4 chart, we can see some signal that changing this line to the uptrend. As you can see here, the MACD histograms also is decreasing, but still we do not have the second signal here to say that now is the time. So still it's not the time, but still generally the market, the downtrend is going to be very, very, very weak. About the oil, uh, oil and gas, both of them, oil and gas, natural gas and oil, both of them still in demand. They have a more demand. Economic data that we had, the fundamental data that we had, all of them are still supporting the more increase, more developing in the economy, even if with the lower pace, but still it is developing, and if we have a good news, I mean, generally by that. Therefore, expecting to see the gold, oil and the gas in higher levels, or at least around the same levels that we have in the current level. It is expected. So from technical point of view, the gas has a very strong support at $4.40, and WTI has a range between 85 and $88. And any next trend need to be about 80, something like that. 88, somewhat here, less than 88, 87, not 80, yeah, it's 87.99. Let's cut it 88, and down is 80, somewhere around here, 86. Between 86 and 86 and 88, we have a range for the WTI, and this range that we can see here, especially with the very strong support at $86, still supporting the uptrend. And next strong uptrend need to be seen above $88. But generally, above $86, it is still in a clear uptrend. In the H4 chart, in the daily chart also is the same. We are still in a trading in a very clear. In a daily chart, we can see that the touching once more the $86 is possible. In the SP 500 and Nasdaq, SP 500, and other stocks, other leading indices, we are in a clear downtrend. And we have too many reasons, as I told. We don't have the reasons to say that, okay, based on these reasons, we're going to see the market in the lower levels. We have a very great earning reports. We have the data that we have a data and speeches that the market is not going to increase the level of tightening policy so fast and be so hawkish at the very beginning with increasing the interest rates with 50 basic points. So therefore, market is still support, expecting a little bit more support, a little bit support at least from the central bank in the United States. Therefore, the slow uptrend the slow uptrend is there in the market and can continue the way. Same thing for SP 500, for the Nasdaq and Dow Jones. It's going to continue. About the cryptocurrencies market, same positive attitude for now is leading the market in cryptocurrencies as well. It's like in the short, which can be the short term, but for the long term, it is not what we can say that okay, since the other markets are increasing, the crypto markets also can increase. But in the short term, yeah, in the short term, the overall market sentiment can increase the cryptocurrencies can increase the cryptocurrencies market as well, demand as well. But generally, still nothing changed here. If you go on in the daily chart, you can see still we need more reasons to say that okay, these are going to be changed of the market trend and the trend and the trend going to be the uptrend. So still we have more reasons to change the trend for the cryptocurrencies market, but still overall market positive sentiment can lead the market. At the same time, the countries like, for example, the El Salvador, from the new point of the news, the El Salvador, they have strongly they oppose the IMF demands. They cannot give the enough legal enough document that why they need to support, why they want to still keep the Bitcoin as a legal tender. The IMF, they want to drop the Bitcoin. IMF wants to El Salvador to drop it, but still they want to keep it, and they're gonna keep it probably. But they're gonna but the main loser will be their government. So this the El Salvador, the country, will be the main loser here. Anyway, for now, still we don't have the positive news in the market. We don't have the positive data in the market or news or whatever that we can say that okay, based on the cryptocurrencies market can be encouraged. So therefore, the market is under pressure, and we don't have any positive news for them. So in this short term increase can be because of the overall market positive sentiment, nothing else. Okay, that was the only news that we had. About the Euro USD, Euro USD is increasing a little bit above, just like not increasing. We can say that trying to regain some of its lost. Same for the euro, same for the pound, and mostly because of the a little bit weaker US dollar, not because of stronger euro or stronger pound. Tomorrow we're going to see that the euro and pound, what's going to happen for them, since the tomorrow both of them they will have a central bank meeting. Yeah, let's see the Aussie chart. The Aussie is got a little bit stronger after the central bank ended the QE program totally, but they didn't change the interest rate. So therefore, the stronger, therefore, so as it was expected, therefore this. I mean, they didn't change the interest rate and they didn't change nothing, so Aussies got a little bit more under pressure, and it probably can continue the way, even if in the short term, short-lived up and down. But generally, I would say that doesn't have enough reasons to say that okay, for this, the interest rate didn't change. It was expected. They ended the QE plan. It was expected. So there is nothing to say that okay, based on this data, based on these decisions, I would say is gonna get the support. Okay, this is generally what's going on and what happened in the market for today in the earning reports. We're gonna have the Google. We are very positive about the today's earning report. So therefore, we can see still if these reports that we're gonna have them today, including Google, including ExxonMobil, including PayPal, including United Pacific Service, United sorry, United Parcel Service, including AMD, Starbucks. Most of them we are waiting for the positive reports. These positive reports can kind of encourage the market, and we can wait for a little bit better than expected numbers still here. Therefore, the bulls can continue in the chart in the leading indices chart, including SP 500. Okay, in the economic calendar, sorry, yeah, sorry, I forgot to say that, but the economic calendar. Economic calendar is very busy day today with the manufacturing PMI numbers. The manufacturing PMI numbers will be out from most of developed economies, as yesterday we had the inflation from the European Eurozone and GDP from some Eurozone countries. Yesterday, the Eurozone GDP, we had the Eurozone GDP and increase, it's confirmed that the Eurozone GDP increased by 4 point some. Let me see what was the number. Eurozone GDP, yeah, Eurozone GDP increased 4.6% in 2021, which is very positive and very good number. That's increasing the GDP by 4.6% in the whole Eurozone. In the last quarter, increased by 0.3%. But generally the data was very great. The other data that we had from the German CPI, the German inflation was higher than market expectation at 4.9%. The market was expecting 4.3%. But the point is that it was it was at the same line of the December. I mean, the inflation didn't change for the last months. We could see that the inflation is increasing. As we saw in China, as we saw in the United States, as we saw in many other countries, increasing inflation stopped. It's paused at least for now. So we cannot see that increase is improving so fast as we could see before. Therefore, inflation at 4.9%. It was at the same level of December, and yeah, a little bit more than the market expected, but still at the same line with the December. It means that the increasing inflation stopped. Same data we had from other European countries as well. So it means that inflation expectations can be decreased and inflation concerns can be lowered, but not cannot be gone. Still there, but still it's going to be less. We're going to have less concern about that. In the continuing, as I told today, will be the manufacturing PMI numbers from all developed economies, and we're going to see. We have to follow that, including GDP from Canada. We have the Canadian GDP as well. Oh, don't forget about the US GLTs. To this, you have the US GLTs opening jobs. It's usually important, and it's like more than a year. We are having more than 10 millions opening jobs. Let's see that can it continue above 10 million for today as well or not in January. Oh no, the GLTs is for December. Sorry, the GLTs is for December. Okay, guys, see you guys tomorrow at 8 a.m. and wish you the best. Yeah.